How's it going, everybody? T4L Trades. We're gonna have a quick little breakdown of our trading days and how we're looking at the market and the wins that we've had so far. Here we have a special guest. His name is Mr. Joe. He's another trader. He's gonna be giving us insights into his winning trades, and we're gonna be sharing our thoughts for winning trades and our easiest wins, and be able to share knowledge and hopefully everyone watching this video can get something from it.
Drum roll, please.
And douche.
There you go, Mr. Joe.
All right. Hello, everyone. You heard it. Now let's get to it. So, currently, to be honest with you, what I've been doing is kind of looking at different strategies and different technicals and all this stuff here and trying to put everything together. So far, what I've been working with. Have you ever did a like use a triple RSI?
A triple RSI, the one that has a top end, a bottom end, and a midline.
Yeah,
Yeah,
for
that's the one that I use. I use a slow
oversold
RSI.
yeah. So what I did was what I've been learning to do with those with that indicator in particularly is I took the three indicators. I took one indicator and multiplied them by three and put different parameters on them. Like when you normally open up the RSI, it has a 14-day period. That's what that 14 means.
Yes.
So what I did was I changed it and I left one for 14, another one for 21, and another one for the 50 day. And just seeing how that would help me out. And so far, like I was telling Chris the other day, it's helping me a little bit more clearly. Uh, and it's doing pretty well for me just on that indicator, but it's combined with a few others.
Okay. So the way that I understood it is, so I'm looking at the slow RSI on my chart. If you're able to still see my screen, and you should. But on the slow RSI, I have 6, 14, 80, and 20. Those are the
For
numbers that are used. So you're basically saying that you switched up these numbers, correct?
correct, correct. That's what I did. And
And
then
then what are the other indicators that you're using for your setup, for your strategy? I'm
ADX,
sorry.
I'm using an ADX, and I'm also going back and forth in between. To be honest, I'm going back in between with VWAP and using EMA for my moving averages, and
Uh,
I'm
Quick question. What
still
EMA?
I
undecided.
have a question. What is EMA?
EMA is the
Uh,
moving average.
yeah,
E-
what it is
Exponential moving
exponential, yeah,
average.
moving average.
Yes. So depending on
Mm-hmm.
how many days you put is the average that you're gonna get. So you have a 12-day EMA, it's gonna be the
Yeah,
average for 12. If it's a 50 EMA, it's the average over the last 50 days. That's like kind of how the moving averages work. What
that's correct.
averages do you use, Mr. Joe?
Let me pull up my chart right now.
If you want, you can share your screen to be able to show us.
No, no, this is the thing. Remember, I don't even know if I told because what now I'm on my phone speaking to you guys, and actually I'm because I don't have my thing I just bought
The tablet.
connected. Yeah, the tablet, and that's what I'm looking at right now.
Yeah, Mr. Joe got a
And
tablet.
yeah, the case just came in last night, Chris. Yesterday,
Oh,
Amazon
Oh,
bought
so
it.
you're
yesterday.
setting it up.
Right, right. That's what I'm doing.
I know
But
worries, but real quick, the signals that you use. So you use EMA, um,
MA,
VWAP.
VWAP,
ADX, VWAP,
ADX,
ADX,
and then a modified RSI.
right.
Okay.
Along with now, along with a true moving average. I mean, not a true moving average, a true what is that called? Lord have
Average true
mercy.
range, ATR.
Yeah, ATR, average true range. So,
how are you measuring ATR? What are you using to measure it?
well, with that, the way I understood the app, I mean the indicator is volume. Doesn't how can you say it doesn't give you any indication on whether the market is going up or down. It's all about the volume that's in the market. Hence, it ain't much volume in the market. It makes no sense for me to be trading that particular pair or whatever I'm trading at that time.
Okay, understood. That's similar to the way I understand that as well. And I'll explain it to you the way that it was explained to me by my mentor. But he told me
Hmm.
that the Bollinger Bands and the Keltner channels, which are actually what I have on my chart here, this is what I've been day trading with. This is my setup. I can go through it later after we finish talking about your setups and your trades. Um,
Right.
but he says that one ATR move is from the top end of the Bollinger Band or their Keltner channel to the midline that they both have. That's a one ATR move, and
Mm.
you're able to measure it. And what you're usually looking for is a 2 to 3 ATR move at the beginning of the first 45 minutes of the day, and that's usually where the market's gonna go. I'm kind of testing out this theory as I'm speaking to you about it because I've noticed that there's three types of trading days since I've been trading during the day. And
Hmm.
there you have choppy. You have days where it's up and down in the same basically range, and it really doesn't go in one unified direction. Then you have bearish days, and then you have bullish days. So those are the three that I've been able to notice. It's just a matter of how do you identify that day is going to be able to do that. And using ATR, I've been able to identify where the market's going to be able to move.
Really?
Yes, sir. And I'll get into all of that when I'm able to explain my setup because I had 4 winning trades today.
Oh wow. Wow. That's great. That's great. Okay.
Yeah, I feel like for the first time I'm figuring something out here.
And that's what I'm doing because to be honest with you, no one told me about the ATR. Where I came up with that from is just digging,
Uh huh.
digging, digging, and trying to put certain things together to help me uh, make better decisions. Um, how can I say this? Now, like I told Chris the other day, still there, guys?
Yes, sir.
Yes, sir.
Yes, because my phone did something crazy. Okay. Um, like I told Chris the other day, um, how can I put this? Uh, a lot of times when I'm looking at guys, when I'm going over the net and looking at YouTube or whatever, I like what I found myself doing was liking to follow people who been putting out information who have they're going back way back in
7 years
seven,
at
8,
least.
9 years ago with trading. And that's how I even found it. Because not really nobody speaks about it now. But when I look at the newer videos and they talking about ATR, they're not giving me the same information as the guys from 7 years ago. And I noticed that.
Okay. So what you're saying is like the more experienced people understand ATR and like the inexperienced people don't really understand it.
No, no. What I'm saying is, if we're talking about, let's just say YouTube, the people who was putting this content on all this stuff 7 years ago, they were kind of showing you and teaching you the real ins and the outs of it because people really wasn't on the I can get rich off of YouTube. What they had things they want you to follow them and join them and do things like this. So they would try to give you as much information on something as possible. So you fast forward to here, the newer ladies and guys, they're like, you don't really need to pay attention to this. If it does that, then do this. Or if it does that, then do this. But the guys, I say 7 years ago, they tell you why it does this and does that. So what happened? It gave me a better understanding of why I was making certain moves, if that makes sense.
Okay, understood. Understood.
Yeah.
Yeah, but another thing, also, average true range is the same as
Hmm.
standard deviation.
Really?
Yes. I
Uh-oh.
was talking about it with my mentor. He's like, yeah, standard deviation and average true range are basically the same thing. Maybe not the same exact thing, but similar.
Okay. Understand. Understand.
And that's good to know because it helps you with options pricing. Because if you do like zero DTE, a 280R move is technically is also equivalent to a two standard deviation move. And if you have a move like that in options and zero DTE, that's when you turn little bits of money into a lot of money.
Hmm.
So
You, you,
it basically would give you price targets of what your zero DTE contracts are going to be. Like I'm thinking about this out loud because I haven't tried it yet. I'm just trading with shares. I'm just trading like price action and trying to make some pips, which are basically like very small percentages, meaning I'm looking for dollar moves. So I'm in at
right.
457 and I'm out at 458. That's like kind of been the trading strategy, trying to trade the SPY. But then eventually I want to be able to do options, but it's a whole different animal, a whole completely different animal. And I have a
Right.
question, Mr. Chris. Mr. Chris said that you were trading before market open. So what are you trading? Are you trading indexes? Are you trading regular stocks?
Okay. What I've been doing was, let's say you got indices, and then you have, I just found out you have synthetic indices, and I'll talk about that in a few minutes. Then this is what I've been doing. I've been dealing with forex, um, options, and indices, and also the synthetics. And basically with me, because I feel like I have to figure out what exactly it is I'm comfortable with trading. What moves too fast for me, what doesn't move enough, and trying to figure out all of that. So what I've been doing was taking this little setup as far as signals and all this stuff here, or what's going on, what I got going on, and just applying it. I may try it here for a week or two. I may try this here for a week or two and see what works better. To be totally honest with you,
Okay, so
so
you're
I'm not
like
stuck on one. Mhm.
no, sorry, real quick question. So you're just like in your investigation stage.
Correct.
Okay,
Correct.
okay. You're finding what works for you, which is a very important
Right.
stage. Most traders and all traders are going to go through this.
Right. Right. That's the stage I'm in. I even been messing around with binary options.
Yeah, you've been messing with a whole bunch of things, Mr. Joe.
Yeah, yeah,
I was gonna
yeah.
say,
Because
you eventually you gotta stick to one. You're gonna have to stick to one. If I'm being honest, I think options is your best bet. Cause
yeah, it
my
at the end
best
of the
way of
day.
explaining options is you make money when price goes up, when price goes down, and you could also make money when it does nothing. The way that I'm currently trading, where like I'm looking
Hmm.
for moves, when the market's doing nothing, there's really nothing for me to do. Because
Right.
it just stays within like a 30 to 50 cent range, and that's not enough for me to take profit. I take profit at $1.
Mm, okay. Okay. Now I believe what you're saying. Because remember, the guy that's teaching me about options is we're strictly on that. But what I'm doing is this is what I'm saying to myself. When I decide to actually put up money and and do this, like go in, I'm primarily going to be doing options, to be honest with you, because that's what he's teaching me. But I when he walked me into this world and I started looking at things for myself and certain things, I'm like, it's a lot of different other things out there. But he also tells me, Joe, just stick to this. Just stick to this. Like you just said. And I'm like, it's cool. I just want to see what's out there. That's all.
Okay,
That's all.
understood.
Yeah.
Curiosity. Okay, understood.
Yeah.
But your
Yeah.
headspace is still more towards options.
Definitely.
Okay,
Definitely.
I just
Definitely.
wanted to clear that up so everybody understands.
Oh yes. Yes. Options, options, options. Yes.
And honestly, if I'm being honest, when you first start trading, like Mr. Chris is about to, stay away from options, Mr. Chris. Just learn how to read the chart.
100%.
Learn how to read the chart, because
That's the most important thing.
options is a
Yep.
completely different animal. It's so looking at the charts and price action and making money is one thing, but then options is like a whole category in and of itself. It's like learning something completely new,
Mm-hmm.
because you have straddles, you have butterflies, you have zero DT options. I can like You can go on and on. There's probably like a list of like 16 different ways you can set up your options contracts, and they could each make money in different ways. Like I said, does nothing, goes up or goes down. Those are your three instances where you can make money. You just have to be able to identify what's happening. But yeah, options is the way to go, but definitely do not start with it. Be able to read price action, be able to look at the charts and be like, okay, I'm gonna buy here, sell here. It sounds simple, but that's what you have to learn first, because that's actually the hardest part. And then after that, you could take on the beast of options, because it's most definitely gonna confuse you and it's gonna be too much. And I am talking just from personal experience, because it happened to me.
Correct.
I tried to mix up options and trading and price action and all that, and it's way too much, because option strategies and trading strategies are two different things, and you have to learn how to combine two different strategies with one, and that's extremely hard when you're just starting to trade and you don't even know what you're looking at.
Correct. Correct.
So basically, um, what is it called? Options has like its own psychology in itself, just like the stock market has its own psychology. Yes and no, or
No, nothing to do with psychology. Trading psychology is different. Options doesn't really have that. But
okay.
to answer your question, basically what the strategy is it's a bunch of different ways to set up your calls and set up your puts. Your call is a bullish
Right.
signal, and then
Signal.
your puts are bearish. So just like a quick sum it up explanation, and basically options like a butterfly. If I'm not mistaken, I think you buy one contract, you sell one contract, and then you buy one more. So that's one way, and you can set that up multiple different ways, up to 3 to 4 different contracts, and they each are different strategies. That's why I said when sometimes the market does nothing, you're able to make money with options. But if you're trading up and down, you really can't read that. Like, if it's doing nothing, you're gonna go to a specific options one. You really can't do that the way that I'm currently trading. Like I said, I told you I'm looking for a dollar moves. If it doesn't get to a dollar, I get stopped out. If it goes back down to my limit, and I get stopped out, and that's what it is. So when the market's really doing nothing, I can't make money. I have to just look away, which is gonna happen some days, and I've realized it, because like I said, you have your 3 days: choppy, bullish, or bearish. Those are how the days go. That's what I've noticed so far
Yeah.
as I've been trading. That's how it is. And if it's choppy, I'm just gonna look away from the market. But once I start getting into options and adding that into my strategy and adding the options and everything, now I'm able to identify, okay, the market's doing nothing. Perfect. I know where I have to go. Like, it's perfect. I'm gonna use this specific option strategy.
I get it.
Mm. So let me ask you a question. Have you noticed um, towards from the beginning of the week to the middle of the week, then towards going into the weekend, do you notice like when you're talking about that choppy area, um, it seems like it gets like that round about Wednesday or so, something like that. If it's not nothing that's going on in the news, that it seems like it pulls back and just stay in a certain range around the middle of the week.
I'll tell you right
And the
now.
reason I'm asking you that because this is what I know from what I realized. I'm like, it's not doing nothing really. But that could be just me and my eyes.
Oh, quick. What time frames are you looking at? I'm looking at 2 minute and 5 minute time frames.
Okay. See, I'm looking at like 30-minute time frames and I'll say from 30 to 15 minutes, something like that.
Okay, so you're looking at a little bit bigger time frames.
Right.
Okay, well, if I'm being honest, I'm gonna run you
Hmm.
back through my week. Just
Okay.
give me 1 second.
No problem.
All right, perfect. So Monday the market did nothing. the market
Right.
the market generally did nothing. It opened at 456 and it closed at the same price that it opened at. 456.75 around there. Same price. So the market generally on that time frame did nothing, but if you can definitely still see my screen, right?
Yeah, I can see it.
So if you're looking at it, this is the way that I have been looking at my charts. So you see these
Okay.
Bollinger Bands.
Okay.
This
Yes.
is this pink line is the Bollinger Band, and then these like beige yellow lines are the Keltner channels.
Mm.
And basically what I'm looking for is literally this exactly, which is this is a 2 ATR move. So from here to here, there's a midline in the middle, right? So that's one. So from the bottom to let's say about here is one ATR move, and then from here to the top end is another ATR move. So that's what I look for to know where the market is generally going to be going. And then once I have that move, now I'm looking to see where the day is going to be trending. If it's going to be trending up or if it's going to be trending down. So within the first 45 minutes, we got a 2 ATR move to the upside. So generally, I put in positions based off of volume, RSI, and the MACD. But what I'm really looking for is after this move, right at the initial day, I'm looking for a collapse after 9:45 or a super surge after 9:45 because that's what's going to set the tone of the day. Because I know that with this 2 ATR move, right, the market is generally probably not going to be choppy. It's more than likely going to be in one direction or the other. After that, I just got to figure out what direction that is.
Mm.
So then here, my idea, I didn't trade it this way. I traded it completely different. I can go back through my notes, but I'll save that for a different video. But the way I would have traded it, the way that I'm now looking at it compared to the way that I was looking at it on Monday, I would have been like, okay, there were at 9:45, I would have seen at 9:45 would have been here. I would have saw there was a candle, but it's at that move, so I gotta wait for it to move up or down from this 2 ATR position. And I would have waited. Just generally what I'm seeing, would have waited to about 10 to like 10:15, and when I would have seen this at 10 to 10:15 is probably when I would have gotten in. When I would have seen this down move, I would have known already, because you have this breaking down and you have this confirming the breakdown. So the strength of the move is a strong strength down. That's why the RSI is falling, because there's the strength in the move is true, and then the MACD is falling because momentum is also continuing. So you have momentum bringing it down, and then you have strength dropping. So that's also going to bring it down with the combination of volume. So what I look for here at the open, the volume is generally always high. So at the beginning of this, I don't really, I take it into account. But what really matters to me is the middle to like beginning before 12 o'clock volume. So as it comes down, I'm looking here. When I'm looking at this volume increase, I'm looking the fact that strength is going down, and that means it's proving the down move, and that momentum is also down. What I would have looked for is a retest, and then this would have been my retest. So I would have seen this move down, and I would have gotten in here. And my stop would have been around here. This is where I would have exited, and I would have been like, okay, I'm wrong. It's about like a half a cent to $1 move, and it closes my position. But here's where I would have gotten in, because I would have been noticed these dojis and all these very, very long wicks means that it's getting sold into. with on top of that, you couple it with the MACD breaking down, strength also breaking down, and then volume increasing, you know that this is going to be a retest and there's going to be more volume to the downside. And then exactly that is what happened. But yeah, you're trading on 15 and 30-minute time frames, so this probably looks completely different to you. Right? It looks like a lot less
Right.
candles, correct?
Yeah, right.
If I'm being honest, I recommend you switching to the 2 to 5 minute.
Okay, 2 to 5 minutes.
Because what you're generally trying to do right now while you're like investigating is be able to test out your theories the most that you can, right? So that's
Right.
what I realized too, because I used to do swing trades. I used to trade once a day type stuff, and I would only put like 2 or 3 trades a week. But when you're a beginner, what you need is like volume. You need to just see what the market is doing. Okay, the market is doing this. Okay, the market is doing that. Like develop that thinking. Like I told you, like I have choppy days. So far, what I've noticed on the 2 to 5 minute, I got choppy days, doing nothing, bearish days, and I got bullish days. And then, real quick, going back to this chart, this move here, if I would have missed it completely, I would have known that because there was a 2 ATR move, that this is going to be a down day regardless. I would have known. So let's say I missed out on this whole move. Another way I would have looked at it is, you see right here how it came back to the previous highs. That's also a retest. It's a retest of this area that had already failed earlier in the day. So around here at the top end of this Bollinger Band and at the top end of the
Right.
Keltner channel, around here or even here, let's say here at 456, I would have put in a short, and I would have wrote it down to in between here and here. Those would have been my 2 exits. It would have been about an 80 cent gain, and then about $1 gain.
Okay.
But that's how I've been doing. But going back
Right.
on your question, Monday generally did nothing. I'm going on now to Tuesday. Tuesday was the choppy day. Tuesday did absolutely nothing. And it traded in very big ranges. If you look at my screen, it traded from the top of the Bollinger Band and the Keltner channel to the bottom. It would get somewhere to like the midline. Oh, you know what I'm missing? I knew I was missing something. I knew there was something that looked funky.
And I'm actually doing that right now for everyone that's in this. I'm actually moving it, doing exactly as you're instructing and doing. Hopefully, it becomes clearer.
Hey, why does the
5, 30,
VWAP not show
15
up?
minutes. 5.
Well, I was trying to look for my VWAP, but whatever. Point being, this was a choppy day. This one didn't really do much at all. There's just no clear direction at all. It's not really
Right.
going in one way at all. This is going to be Wednesday. Wednesday was a down day. Wednesday was the bearish day. Wednesday was bearish from the moment we opened. I need the VWAP. I need it. Why is it not showing up? It's very, very important with what I'm trying to show.
And you're using Keltner and Bollinger Bands, I see. Right?
Yes, sir.
Just to be clear.
All right, there we go. So this is Wednesday. This was the bearish day. And here's the funny thing. The bearish day at the beginning, first open candles, we had a 1 ATR move. All right, that was good. And then you see it right here. This is how you knew it was going to be a bearish day. It comes up to the top of this VWAP. VWAP, what you always want to see, what I've noticed with VWAP is you want to see a good break above it, or it stays at the VWAP for a very long time, and then there's a break above. You want to see a confirmation of the break of VWAP is what I've noticed in trying to use it. So then here, You come in, you have a 1 ATR move to the downside. It chops around for a bit, and then you have a complete 2 ATR move to the upside and almost 2 to 3 ATR move to the downside. This would have been my confirmation that it was going to be a down day. This right here would have been my confirmation. When would I have gotten in? I would have waited till I would have gotten in around here at this retest of this level, because I knew the day was going to be bearish and it was going to continue down. And if you see, it's below the VWAP, and I've noticed that when it stays below the VWAP all day, it's going to generally continue in the down direction, because the VWAP's acting as resistance, not as a magnet.
Makes sense.
So I would have gotten in here at when I got close to this VWAP. When I got this close is when I would have been in at 457, and I would have gotten my dollar right here at 456. Literally, would have gotten it at $1. And this was Wednesday, so then this is gonna be Thursday. This was today. So today was a very good day for me. So coming into the open, we had a 2 ATR move to the downside. So once I already saw that happen at the open from 940 to 948, when I saw that immediately at the open, I was like, all right, I just got to give it a bit. I got to keep watching, because there's going to be a trend. There's going to be a trend on our hands. All right, boom. So then as I'm at work, I'm not really paying attention. This starts happening. And then eventually I start seeing it go up and up and up. Funny enough, once I saw this, I was like, okay, the day's gonna continue. The day's gonna continue bullish, and we're gonna continue up. I ended up getting in. So this is gonna be more play by play, because I'm able to run down my exact entries. Let me pull them up so I can see them. Oh, I forget I have them on my notes. So right around here, the bottom of this Keltner channel is where one of them was. This is where it was. I had one entry here. I had 2 entries here, because I ended up entering again somewhere eventually here I entered again, but I managed to get the same entry twice. So I had an entry here, and then I had another one around here in this green candle. So I had 2 here. I had 2 entries here, and my assumption was that it was this Keltner channel and this Bollinger Band were going to act as support, and it was going to continue up. But I was wrong. But here is where I still stuck with what I knew. I knew that this is what I was looking for, and this is what was gonna be my signal that big money is involved, and it was. If you look right here at this moment, volume increased a ton. So the same people that brought this up are gonna be protecting the same area. That's how I was looking at it. On top of that, it was at the bottom of the Keltner channel, right? And I knew that since it had already broken above VWAP, even though it is currently below VWAP, it was going to act as support. So what did I do? I doubled down. And I doubled down at 456.90 something. Yeah, 456.75. I have 2 different entries. No, I actually have, 2 different entries. 456, right here is where I entered. So right around here I entered. 456.79, that's around where I entered. And I rode this all the way up until here, and then this is where I took my profits. So I had 2 entries here. I didn't sell these entries. I still held them because I was confident in the fact that the same people that made this go up were also going to save this down here. And I put my 2 entries here, and I continued to ride this wave. I made money here, It chopped around for a bit, and I exited somewhere at like 2 in the afternoon, like around here. I exited the rest of the position. It was 4 entries and 4 wins for today.
Not bad at all.
Yeah, so this is the way that I was looking at this as a retest, by the way. To me, this was a retest of this area because if you see, it kind of looks obvious the more and more you trade. All of this basically means people were building up big positions. It's very big candles, very long wicks. They were building up to be able to make this move here. So the same money that was building it up and made the price action go up is only big money. Those are the only people that can do that. It's big money. No one else can do that. So when I saw this come back into the same level that it had completely bounced away from earlier in the day, I was like, this is my buy signal. They're gonna eat this up, and confidently enough, and for one of my first times ever, I read the market like a tape. I like read it like a book for once. It really doesn't happen that often.
And these of all, this is off what like you say, what candles by the second,
No. 2 minute and 5 minute. So right now
two
we're
minute
looking
and
at the
five.
2 minute.
Okay,
But I
okay,
flip in between the 2 minute and the 5 minute to give me a better understanding of where the actual move is going.
okay.
Because I've noticed that on the 2 minute time frame, the Bollinger Bands and the Keltner channels, they compress. What I mean by compress is like when I'll show you on the 2 minute time frame. It's a perfect example. So this is the compression I'm talking about. You see right here how the Bollinger Bands compressed with the Keltner channel.
Compressed, yeah.
When it
Mm-hmm.
compressed like this, that's basically telling you it's gonna make a big move, and it's either gonna be up or it's gonna be down. And this time it was down. And sometimes it trades in a range, like here, it never breaks out and never. You see how it trades in a range. Sometimes it
Yeah.
does that, but when we identify that the day's gonna be a bullish day, we know that the dips are gonna be bought. That's what we know. The dips are gonna be bought. The same levels we're looking at, the big players are looking at. So my like very big idea towards all of this has been identifying where the big money's at. Where is it at? And what direction does it want the market to trend? So, Mr. Joe, I heard that you've had a lot of success in your trading. How has that been, and how can you like run us down through it?
Oof. Well,
Without showing us, do the best you can to explain
right.
it.
It's no secrets over here, but what I've been doing, going after you, it sounds like I don't know a damn thing. I like that. Um, like I said, what I've been doing, this was a combination of my using the RSI and what was that I was using? Because as you was I'm finna go back to my original shots. Because as you was talking, I'm gonna do some studying. I don't use the Bollinger Bands and the Keltner. I heard the Keltner before. I don't use it, but let me check this out. Let me go back
That's
to
my
my
day
original.
trading setup.
Yeah, that's
Yeah, that's
nice.
my
I
day
like
trading
that.
setup.
Let me go.
My
Raise.
so just so the viewers know, my setup is like Mr. Joe is saying, the Keltner channels, the Bollinger Bands, the VWAP, the MACD, the RSI with a midline, and volume. That's what I'm using to identify and turn my what I'm looking at into a decision and a trade.
Mm, wow. So what I was using was my ADX, and I was using my I tripled the RSIs on my own, and also my moving my moving average. I used to use the MACD, and I don't know what made me stop using it. But I just stopped for whatever reason, because like you said, I'm in a that space of trying to figure out what works best for me. So based off what I do have, yeah, I was winning, and it's a demo account, guys. Nothing live.
Nothing live. What you're looking at
Nothing
on my
live.
screen, nothing live.
Oh, okay.
Yeah, mine's is not live either because I'm testing out
and I
strategies just like you.
Oh, okay. And so what was going on was I would wait. I was using a far, what I would do was, to be totally honest, I would use the day to show me where I would use the daily candle, and then I would use the 30-minute kind of see out what I'm in. Like say if it's a green or a red candle for that day, right? And then what happened is I'll go down and I'll see what my indicators, go down to like 30 minutes and then 15 minutes and all that. And then it kind of gauge, okay, it's saying that we in a green day or in a red day. And so what I'll do is if I know I'm in a green day, then I'll sit back or a red day, doesn't matter the day, and then I'll look at what my indicators are telling me. And then what I'll do then is just try to use these indicators and what's kind of going on for that day as far as say if it's information that's been given and stuff like that. Oh, what is that? Hello?
Hello?
Okay, yeah,
You're good.
sorry.
You're good. You're good.
Yeah, it made a noise. So anyway, and what I would do is when like for instance, let me see, the ADX, when it tells me and it aligns with the RSI, when it tells me, hey, the strength of this particular trend is going in this direction, what I'll do, I'll go ahead and get in a trade, right? And then what it is, because I looked at the higher time frame, I know it may take a 5 minute or it'll take 5 minutes or 30 minutes to get to this point. That's the way I seen it. Now it could be pure luck, is what I'm going to tell everybody. And it was actually hitting. I actually hit what I showed you, Chris. I hit my winning trades about 20 times in a row. And I've never done that.
Whew.
Off
That's pretty good,
I
off
thought
Mr.
it was
Joe.
820. Wow.
yeah, but see, I don't know enough to say, well, that's something real. I'm going to stick with that.
So when you
So
mean red or green days, are you talking about like bearish or bullish, or are you
bearish
talking
or
about
bullish, yes.
candles?
Yes, bearish or bullish days. Like in a day candle, say if you use a day, it may start off you know, it'll be in green. Like say if it's green. So I know it's gonna take uh that when they say that daily candle, let's just say it's actually in a green. It's just in green or red. So that's what I would do because I knew, wait a minute, it takes about 15 or 20 or 30 minutes. Once I break it down, go from the day, 4 hour to this, I was doing a lot of work. See,
So
I'm in discovery, right, like you said. Go ahead, I'm
so
sorry.
question, is your signal, are you using like your signal of it being like a red or green day? Is that like your signal?
No, what it is, I use those far out days to like say, okay, it looks like it's going to be a green day. No matter
Okay.
what the smaller candles say, let's say if I'm doing 15 minutes or 5 minutes on them charts, what I'll do is let that tell me it's going to be a green day. It's a red day. That don't mean that when you go down to those smaller charts, in my understanding, that please correct me if I'm wrong. In my understanding, that you're going to have a green, a bullish, or a bearish day from
Yes,
far out.
but you usually identify that on lower time frames, because the way that I'm understanding it
Ah,
is you're looking at the daily candle as like an
right,
indicator whether it's going to be green or red, and that's not an
right,
indicator at all, if I'm being honest. That's
right.
that I would never look at that, cuz because a day could start off super red and it could completely flip the complete opposite way.
Ah, makes sense.
Yeah, that's why I kept asking
Makes
you
sense.
questions on it because I was kind of confused. I was like, I don't think that works. That's what I kept saying in my head. So I was like, let me ask him. Let me make sure. But yes,
Mm,
don't. I would not use the daily to look. You see how I gave you a strategy of a 2 ATR move identifies
right,
generally where the market's going to be trending.
right.
That is something more like a signal. So you could also test my setup up. You could test my setup if you would like, and you can see how it works for you. But definitely, if what you're doing is correct, you're using the longer time frames to justify. But on a daily time frame, you can't really justify the trading day that you're currently in. You have to look at lower time
Mm,
frames to be able to make it. Because remember, there's
uh,
only six.
so
I
totally,
think the market's only open 6 hours.
right. So what happens is just basically what I've been doing, just do it in the opposite direction, using my smaller time frames to dictate what may go on throughout the day.
Yes, sir.
Is that what you're saying?
Yes, and look for like exactly what you said, where you're like, so I would look at the ADX and I would see that it would line up with the RSI. It's the same thing that you're looking for here. So if you look here, the RSI gets to the midline. You have an increase in volume. So this is a significant move altogether. But they line up. They line up here, here, and you could have got it in here, and you would have rode it to the top. And when you would have seen this, you would have known that the same people that moved this are protecting this same area, and I would have gotten in again. But that's my strategy, because what I'm trying to learn how to do is figure out days where I don't trade, which I have. When it chops
Mm,
around, I'm not trading. I'm not putting no trades. When I just see no general direction, I'm not trading. I can trade
mm,
bearish days and I can trade bullish days. So when the market's trending up, I can trade it, and when the market's trending down, I can trade it. Because what I'm looking for is I'm only looking for dollar moves. So I'm looking, like I said, I'm looking for where the market's gonna get bought up, just like it did here. And if we go even to here, this is a good signal. You have here, it comes down into this midline RSI. This middle line RSI can be support or resistance. And right now, as you can see, it was support the whole time. That could have acted like a signal. The fact that volume was increasing, right? It wasn't going down at all. Volume was increasing, and it was holding the RSI. But the minute you get to right here at this candle, you had a break. You could have gotten in here as well, and you would have gotten up till you started seeing all of these dojis, meaning prices either going up or down from here. But that's where you would take profits at least.
mm.
And then over here
And that's
is where I would look for a
mhm.
rebuy, right? I would have been looking for a rebuy here, but I ended up rebuying again here. But go on, Mr. Joe.
No, I'm putting it all together. So, like you say, this is your daily your setup, your daily setup.
Yeah, my day trading setup. This is not
Right.
like, so these I trade anywhere from, I could be in a trade from anywhere 1 to 3 hours. I'm not in it all day, but I could be in it from 1 to 3 hours. And I'm using the 2 minute and the
Mm,
5 minute to determine my decisions.
okay.
And this two
Okay.
minute looks completely different than the 5 minute. And I noticed, because I had days where I was only looking at the 2 minute and I'm like, why did I make that decision? And I looked at the 5 minute and I'm like, but wait, the 5 minute looks completely different than the 2 minute. And I realized, look at both of them before you make any decisions, because they usually both tell me two different things, but generally in the same
Mm,
direction.
okay. Let me see here. I'm actually writing this stuff down as you're talking.
So like you
Oh,
said, combine indicators and
mm-hmm.
look for where you think the market's trending, and once you're able to identify where the market's going to be trending and what direction it's going to be trending in, all you had to look for is, you would have been like, okay, this is going to be an update. Just based off of this, you would have been like, this is going to be an update. We had a 2 to 3 ATR move, and you would have just waited for it to get back here. Obviously, I'm impatient. I'm extremely impatient, and have problems over trading. So When did I get in? I got in at the bottom of the Bollinger Band, but guess what? I didn't notice that the Bollinger Band was being compressed. If I would have noticed that it was being compressed, and I did pay attention to it, because when I saw it being compressed, I was like, "Oh, this is bullish because it's gonna hold here and go up." It didn't. But like I said, going back to the same idea, when you would have seen this move, you would have just waited for it to come back to the same level where you saw it, where there was support at. The same level where it was doing nothing. You would have waited till it got in here, and you would have put in your money here. And you would have been done with the day. But I'm impatient. I entered here. I suffered for it, and I took a loss. But my idea and my thesis was still correct in that the market was going to continue going up, and I rebought, and I still made money. So this is a day where, like I said, I read the market like a tape. That's never happened to me. Speaking straight facts, that has never happened to me, where I'm able to buy something like this, and I'm looking at the market on a completely different way than I ever was.
Wow. So let me ask you a question. Are you? This will be the same thing as saying you waited for the people who way back at, I ain't gonna say way back, but a couple minutes ago, you was looking at them to, they was looking to push the market up, right?
Yes,
And then when you knew when it got to back came back to this level, they wasn't gonna basically take
a loss.
a loss, so they had to push it back up at least a try.
Yes, sir. And it's
Okay.
funny because it always happens before 12 o'clock. It's always before they go to lunch. After 12, this is usually what you get after 12. You get chop, or the market trends in
Chop.
the direction that it did at the beginning of the day, which is higher. It'll just slowly trend up. It'll stay in the same position, but it won't go down because it's bullish. If this was bearish, it would stay chop, or it would go down if it was a bearish day.
Hmm.
But yes, because the way that I think about it is, the only people that are able to do what's on my screen right now and make the SPY a billion dollar ETF go from 456 all the way up to 458, almost $1.50 move. That's people with money, and they're gonna save this with all the cash, all the leftover cash, because they know what it is. They're the ones that made
Right.
this move happen, and were waiting for something like this to happen so that they could buy in again. That's how I see it.
All right. No, you're on the right track because as you're speaking, I'm understanding, and how I hear this is basically almost like only, if I say it another way, supply and demand per se. Am I right?
Yes,
Wrong?
sir. Yes, sir.
Okay. Hmm.
Because
Okay.
these same levels that we're looking at are support zones, and they're technically qualified as supply zones as well.
Okay. Okay. Because when you're taking all this information in, to be honest with you, that I'm taking in outside of everybody who's telling me this, or the one person who's saying this or that, and I'm just trying to, you know, is gain as much knowledge. By the time I meet up with that person, what's going on, I understand certain things, and I'm like, now I'm starting to see it. I see it. I understand
Yes,
certain things.
that's
Okay.
crazy. Because the I'm having that like same moment again, where like I'm like realizing, I'm like, damn, I never like looked at the market this way, and the way that I'm talking to you now, I literally just figured out probably in the last 2 weeks of trading. I had never figured it out before.
Really? Wow. And you explained it perfectly. Like, I can understand what you're saying. And I'm gonna keep it 100 with you. I'm gonna try and understand the Keltner and how all these things work together. So the next time that we do have these talks, I can say, "Oh yeah, Nick, I understand what you're saying."
Yeah, but remember, if you get a 2 to 3 ATR move in within the first 45 minutes of the open, there's going to be a
Okay.
trend day on your hands. You just got to look for where the trend is. And it doesn't have to
Mm,
be exactly at the 45 minutes, because remember we had a 2 ATR move to the downside, right? And then come
okay.
around 10 o'clock is when the trend was set. It's going to be an uptrend today.
Okay.
Even though we opened down, the trend, even though we opened down and we had a signal that was in the first 45 minutes of open, that it was going to be a trend day, because that's the way that my mentor told me to look at it. That if there's a 2 ATR move, either in the up or down direction, it's going to be a trend day. You just got to look for the trend. Here is where the trend was created. The trend for the day is going to be bullish, and you know that. So if you know that, you could get in here like I did, or you can get in down here. But either way, you would have made money even if you did get in here, because eventually throughout the day it came back up.
That makes perfectly good sense.
So, Mr. Joe, quick question. So, what have you gotten from today's talks? What have you learned, and what do you think you would implement?
Well, the first thing I'm going to stop doing is doing it backwards, going to my higher time frames to try to kind of dictate what I do in my lower time frames. I recognize that immediately. Bad mistake. Um, Two, listening to all these people seriously on the internet, because that's where a lot of this stuff, the information I'm getting. See, I'm thinking I'm getting wise by trying to when I meet up with my dude, I'm like, I have all this information, all this stuff, and he'll sit and tell me, "Oh yeah, that's what that's about. This what that's about this." But I'm not. What it is I'm so happy with understanding these different indicators and talking to you. I'm realizing I don't need to be using all of these indicators,
Yes, that took me a
and
long
I
realization to come to, by the way.
yeah, because what happens is I starting to notice the people who actually trade, who I can talk to, and depending on and the so-called professionals online and these things are you guys who I actually know that actually have a bit of experience in trading. You guys are not all. Listen, your charts are not all complicated with all of these signals and all of this stuff. You just
It's
they're
about
simple,
understanding price action,
right?
which is basically knowing where the market's going to go. That's what price action
Right.
is. It's the candles, it's support, resistance zones, supply demand zones, volume. It's all of that. That's what price action is. Reading where price is going to end up. That's what's most important, and that's why that's why the better and better traders get, the less indicators they use and the more they try to simplify it, because you understand every time you look at a chart, no matter what time frame it is, you're going to understand it, and you can create a thesis into what general direction you're going to go in. But here's the thing, with different time frames means different decisions. If you're looking at a daily, it means you need to make your decisions in between 1 and 7 days, or like 1 and 14 days, because you're working on a daily time frame. If you're working on a monthly, you make your decisions monthly. Monthly
Right.
slash weekly, you should be making decisions. So same, that's why I told you to lower your time frames, because if you're trying to make decisions within 6 hours, you need the best and most information you can, and that's on the 2 minute candles and the 5 minute candle. It's going to give you the fastest way to identify where price is going, and whether it's going up, down, or doing nothing. It's going to give you the quickest tool. Now, if that's not the type of trading that you would like, you could always eventually, after you figure it out, day trading, you can switch it up, and you can only do a trade every week or two, and you could change it from day trading to now you're a swing trader, and eventually maybe you're only a monthly trader, per like example. But the reason I say to use day trading first and use lower time frame is because you need to realize that what you're looking at on a 2 to 5 minute time frame is the same thing on all other time frames, whether it's an hour, a month, it doesn't matter. But you want to get the number of occurrences in. You want to be able to see, okay, wait, I could go here, I can get out here. I could go here, I can get out here. You want more of that. And if you're doing that on a longer time frame, you're going to have less opportunities to do that and be able to notice something. So that's why I'm actually day trading. I don't know if that's gonna be my like final way of the way I'm gonna be trading. I think I might be a swing trader where I trade like 1 day or 2 days out of the week type stuff. I think that's how I'm gonna end up trading. But currently, I'm trying to see what am I noticing. Am I right in my assumptions of what I'm looking at? Am I able to identify where price is going for the day? Am I able to identify where the big buyers are at? That's more what I've been focusing on. A lot of this is focusing on the experimenting of it. Don't focus on making money. Focus on the experiments that you're doing. So focus on, oh, so when it goes here and when these three confirmations line up, it does this. Test that out. Write down notes about it. You got to see if you're right. If you're not writing notes, you're not going to know if you're right or not. So
Correct.
that's also another big thing to it. But basically, look at it like a big investigator. You're trying to find out who's the murderer, and you're trying to see. It's a big investigation. You're trying to be the cop that identifies the winning case. That's what you're trying to do. You're not trying to make money. You're trying to see if your assumption is right.
Makes sense. Makes sense. And if you use, and what I'm also picking up from you, you're using the smaller time frames and the whole day trading thing. If you become pretty good at that, then what I'm getting from you, going moving forward, you pretty much can do what you want. Am I correct?
Yes,
Okay.
because I know my issue is over trading. So I'm letting myself day trade where I could overtrade, so I don't make, and I could overtrade so many times that it's gonna get to a point where I'm gonna learn my lesson a lot faster than if I was just doing 3 trades a week. I'm averaging probably like 3, 4 trades a day now, so I'm going through 20 trades, 25 trades a week, right? Whereas before I was only doing 2 or 3 trades a week. It's not enough like looking at it. It's not enough homework the way that I like to look at it. You're not practicing it enough. You're not practicing reading price action and reading where the direction is going to be going. So that's why I moved to shorter time frames and I moved to day trading, because I'm trying to see, okay, do I really understand charts? And I do understand them. All the knowledge I have, I do understand them. I just don't have the number of occurrences, which is the experience. I don't have the experience looking at the market over and over and over and over and over again. And another big way I like to think about it is law of averages. When you do the same thing over and over and over again, and you look at the market over and over and over again, you're going to notice something that happens often, and that's going to be your edge. And when you're able to notice that often, you could add that to your playbook. Your playbook is a list of things you look at, and these are your go-to trade setups. That's what like your playbook would be. So like when a certain day is one way, okay, I know it's going to be a bullish day. That's kind of what a playbook is. And that's how I'm looking at it, because the markets are extremely efficient, meaning they stay relatively in the same type of price action, and they relatively function the same way over and over and over and over again, like 90% of the time. The markets are extremely efficient. So taking that into account, what you're really trying to look for and get is the experience of looking at the charts constantly, making mistakes constantly, or making the right decisions constantly. That's what you're trying to do. And that's what I realized. What I realized is, no, I gotta put however many trades I can. I gotta lose however many times and win however many times I can, till I figure out and see, okay, no, I'm looking at this like if I was reading a book. All of a sudden it looks like English, and it doesn't look like a bunch of lines, and I don't know where price is going. Everything now is all together, and I could tie it all together and be able to come up with a thesis and an idea of where I'm gonna get in and where I'm gonna get out. Just like a scientist and just like a detective.
Right. Man, you gave me a way to look at it. A real good way to look at it. Nobody has ever said that to me, and I understand. I understand. Mm. So let me ask you this. Um, Price action determines where you enter your entry points, right? You let that determine that?
Yes.
Okay.
Price actions, and I also look for like previous supply zones, support zones, and also the Bollinger Bands. This
Hmm.
bottom line is also support. You see how here it likes to trend from the bottom to the top, to the bottom to the top. It likes it. That's what it likes to do, right? So it's not always going to be that way, but generally these lines are magnets in either direction.
That's your Bollinger Band. What you're doing now, right?
Yeah, both of these
Okay.
from back to back, those are the Bollinger Bands, and the VWAP is
Okay.
the blue line.
Right. And that's your Keltner in between.
Yes, this is the Keltner, this beige
Okay.
line.
Okay. Okay.
So yes, but you see this price action here, how this is a supply zone, this is a support zone. This is a very, very, very important area because remember, this is where price consolidated and took off like a rocket.
Right.
So this zone is extremely important, and this is the price action that happened here. So when it gets back here, and you see something like this big, very, very, very big wick, and the next candle is green, I would have gotten in on this
Right.
candle right here. When you would have seen this candle on the 2 minute time frame close, you would have gotten in
Right.
immediately because this wick is confirmation that this area was protected.
Mm.
That's how I look at it. Now, in the moment when I'm at work and I'm like rushing and I'm trying to look quick and do stuff, I may not notice it all the time. But I knew that when it got to around here, I put a buy in either way. And I just sat on it and I forgot about it. I didn't even look. I'm literally like, when we talk about automizing our trades, where we're like, I don't put stop losses because I know where I'm out. And I know that if I check in 15 minutes and it's there, I'm closing the trade out. So I'm not currently working super automatic, but when I have more time and I'm not at work, I'll be able to set something up like that. But yeah, I'm basically confident in my analysis of being able to read the markets and read the charts. So we'll see how good my success is and if I'm really able to build an edge against the markets
Right.
and become a consistent winner.
Consistent winner. Yeah. Shoo.
So, Mr. Joe, your
Now,
final thoughts so we can end here if you have any more questions. And then we can continue after the recording.
yeah. Um,
Final
we
thoughts.
probably, yeah. My final thoughts are, I don't know what I thought I know, but now I know what I don't know. I know that's confusing, but I know
No,
what I
it's
need to
not. I
work on.
understand exactly what you just said.
But I know what I need to work on, and I thank you because you didn't have to share this, but it's a work in progress, man. And we all working at it to get better. But I thank you so much. But I understand some things now, and hey, Nick, thank you so much. Um, Trading, we'll get there someday. Well, I will. But thank you so much, man.
You're
And
welcome,
don't
Mr. Joe.
complicate them choice. Anybody listening, whenever you get the chance here, if it gets put out there, do not complicate your shots. That's it. That's what I have. Have a blessed day.
That's some very, very, very good advice. Thank you, Mr. Joe. Like he said, have a blessed day. Have a wonderful morning, evening, lunch, whenever you're watching this. And we'll see you guys in the next one. Shabala.